All right, guys. So today's gonna be part two of the daily bias video that I posted yesterday. Um, Obviously, I told you guys that I would be using a chart this time instead of just explaining it. Um, but yesterday we talked about daily bias and conditions. So today we're gonna be talking about what is a condition and how we're gonna use it to find our daily bias. So let's go ahead and get right into it. So a condition. Okay, why do we have white text, guys? That's ridiculous. Okay. Can I extend this? Okay, guys. Okay, a condition. Can I make the text bigger? Okay, yeah. And then can I add a background? Can I add a background? Okay, yeah, I can. Boom. All right. A condition is a area or zone that we expect price to come out of, like a reaction. Okay, so a condition is an area or a zone that we expect price to come out of like a reaction, right? So I'm sure we all know about fair value gaps, inverse fair value gaps, order blocks. I don't use order blocks, but breaker blocks, whatever you guys use. But yeah, a condition is an area or zone that we expect price to come out of like a reaction. And then um, a condition for your daily bias would be an hourly or 4-hour fair value gap or IFVG, right? So a condition to find your daily bias on the higher time frames would be a fair value gap or inverse fair value gap. And I'm going to get into how we're going to be looking at those here in a second. But yes, and then a condition for your entry um, would be a 15 in fair value gap. Dude, why can't I type today? A 5-minute fair value gap and a decently sized 1-minute fair value gap. All right. So a condition for your entry would be, this look good, would be a 15-minute fair value gap, a 5-minute fair value gap, and a decently sized 1-minute fair value gap. What I mean by a decently sized 1-minute fair value gap is like, I can actually just show you guys examples on the chart, but it's like a fair value gap that is it's sized pretty big. It's not sized like just like this. It's like pretty extended over one bar. So that would be your middle bar. So we're gonna look at kind of how we would find your hourly bias before we look at a chart, and then we are going to get onto the chart, and then we're gonna go over these two things right here. So let's pretend. Where's the path tool? Okay. Actually, I'm gonna set up this first. All right. So let's sit here and pretend, right, that we have a draw and liquidity higher and we have a draw and liquidity lower, right? Let's just pretend. And market open, we are right here. We are going to expect price, right? We're going to expect price to have to retrace into one of your conditions, which would be a fair value gap on the hourly time frame or the 4-hour time frame, to push price higher, right? Because if we're going up, we're trying to make higher highs and higher lows. If we're going down, we're trying to make lower highs and lower lows, right? So a condition to find your bias would be, hey, if we have this hourly fair value gap, if price comes back into it and we respect the gap and we see buying pressure out of it, then I'm expecting to take the highs, right? Same thing if we are bearish, right? We are expecting price to come into one of our conditions, tap the condition, and then run the lows, right? Because we need to make lower highs and lower lows. So if we have a fair value gap in here and we have the fair value gap and we see very good selling pressure out of it, then we can expect to go to the lows, right? So that's basically that's the basis of finding your bias, right? Because you can't get it wrong, because on the bullish scenario, right? If we come in here and we tap the gap, but then we inverse it, what does the inverse for value gap mean? That we're trying to go the other direction, right? But like this, we came into this gap, we tapped the gap, and we saw the pressure out of it. That's how you know we're going to go to the high. Same thing with this, right? We come into here, we tap this gap, we run lower. But if we came into there and we inverse the gap, then we can expect to go back up. So it's very simple. It's literally if the tap happens, then we should see the pressure out of it. If not, then we're going to go the other direction. It's that easy. Fair value gaps, inverse fair value gaps, right? So let's get let's go on the chart and look at some stuff like that. Okay, let's go to like just a random. Just scroll back a while. 17. Okay, this is 8. Boom, boom. Oh wait, it's actually really choppy. Let me go to like. Yeah, I can go to here. 8, 8, 8. Okay, perfect. All right. So, 4 hour time for me. Dang it! It just put me all the way back. That's really annoying. It's okay. We're in October now. Okay. So, we can use really any of this. Right here. Right. We have a 4 hour fair value gap. Right. This isn't really a market open, but it still applies. We tap this 4 hour fair value gap, and what we're doing, we're gonna, if we would inverse it, we would have looked to take the lows, just like this, right? This fair value gap still applies because we never inversed it. We went through here, and this candle closed under it. That's how we know we're gonna take the lows, which would have been my target would have been right here because it's a new week opening gap, and it's a no wick candle. So that's would have been my target. We took those lows, right? Again, right here. Why can't I? Whatever. 4 hour gap, dude. What? Whatever. You guys get the point. I can't really mark it, but 4 hour gap. We come up here, we come down here. We tap this, and we take these highs. So that's literally how easy it is to find your bias, which is literally just a drawn liquidity. Your bias is going to be a drawn liquidity. It's nothing more than that. Let's see. Let's get some hourly examples here, so I can show you guys some examples before we go into the entry type things. What month is this? Okay, this is still December. Let's go to. All right, this is good too. All right, so right here we have an hourly fair value gap, right? Price came up into it. We didn't come back down, and we inversed it. So what does that tell us? That tells us that the direction that we want to go is up. And what do? We took these highs. So it's literally so simple, guys. It's like I don't even know how to explain how simple this is. All right, this right here, fair value gap. We came down. We tapped the fair value gap. This also looks like a 4 hour. I don't want to click it because it's gonna like make it go back. And then what do? We take these highs, these external highs, over and over and over and over and over. Like this is what this looks like. Let's give you a couple more examples. This, right? Fair value gap. What do? We come down in here and we take these external highs. It especially helps you like look at stuff like this whenever the market isn't choppy. So like stuff like this, bro, you don't want to be like trading this anyways, especially if it's like an hourly range is just not a good idea to trade it. But like you're also gonna have a hard time finding where price wants to go in your hourly range if we're just like moving around like that. It just kind of sucks. Let me find one more example for you guys here. This market open. This one is, I think, yeah. Okay. So right here, price came up into here. We tapped this fair value gap right there, and then market open. We ran those lows because we saw this inverse fair value gap right here. We inverse this one, this bullish fair value gap. What did price do on market open? Price open, and we ran those lows. Like super, super obvious on what's going on, right? So we understand that part now. So now let's go ahead and move on to the 15-minute, 5-minute, whatever time frame, and yeah, we can show you guys what is actually going to be your entry point. So let's actually find a market open example. Let's see. Okay, this is like, I don't know, it's just December price action. It's just not good to be looking at. All right, this is fine because it's at the beginning. But are we at market open? No. I actually might need to go on. Let's go on FX replay, guys. So this is going to be a lot easier on FX replay to show you guys what we actually are looking for here. Yeah, so we can literally just hop into a random session. And let's see. Let's just hop into like whatever this is. Okay. So let's just go to a market open. Boom. Right. So on market open, what do I see? I see that these highs are available. Oh, this is beautiful. All right, these highs are available. We have a 1 hour condition, and on the 4 hour, we are looking pretty bullish. And then these highs just look pretty free, but we're also in this 4 hour condition that's supposed to push us down, like we saw in here. We tapped this condition and we got pushed down. So we're gonna see on market open, if we inverse this condition, we can expect to take this low. If not, we can expect to take these highs, right? And then on the 15-minute time frame, we have this condition. Let me delete this real quick so we don't get confused. We have this condition, right, which says if this holds, we should be able to take these highs with good displacement. So let's see on market open what happens. Boom. It held, and I guarantee next couple of candles we take these highs. Boom. Took the highs. It's literally that simple. Literally that simple. Like we just took the highs. Oh, what the? Wow. Okay. Anyway, we took those highs literally just off finding a condition. Like that's literally it. I promise you, with a drawn liquidity and a safe entry, you can be rich. Like this is not hard. All right, this I can't even use that as an example because it's ranging. Trying to find like good example for you guys. Okay, this is kind of difficult to use because we inversed it, but it's also like I don't know, it's like just a bad example. I gotta find something where you guys won't get confused. Is this a 4 hour gap? Not really. Bear with me, guys. I'm just trying to find something that makes sense to you guys so that there's not a lot of questions. I'm not saying questions are bad or anything, but I don't want you guys to get confused when doing something like this. This looks fine. Okay, so what we can say here is if price comes over here and we come in this condition and we inverse it, then we can expect to go lower to a draw on liquidity, which would be this for value gap or this low down here if we can displace through that. Sometimes we won't even hit the condition, but we can see where we're going based off of the displacement. What the hell? Okay. What? That doesn't even line up. What is that? Bro, what? Where's my... What? Guys, this shit is tripping. This shit's tripping. I'm sorry. Like, what just happened? All right, this is even better, actually. Sorry. Let's see if we got a 4 hour, though. Yeah, we do. All right, so we are in a 4 hour. We tapped the 4 hour gap, and we also tapped the 1 hour gap. And then we have these external highs right here. So if we're going to go higher, we should expect to kind of just rip off of open, actually, because we do have this also. And then if we're going to go lower, we should expect it to displace pretty heavily down and then take this draw out. And then, yeah. So we also have this 15-minute condition right here. Bang, bang, bang. And then we can see what happens off market open. Inverse the condition, and we rip through, like I said, right? Coming down to Okay, I was like, what? Coming down to these lows. So you could take something like you could find like okay, this is a good example also of a 1 minute gap, right? You could have this if price comes into here, which it didn't. Um, then yeah, you could have had something there if it would have reacted out of it. And then here, let's see if we can get anything. Like this is decent, right? We have this 1 minute condition. This condition held. Previously, we see we're making higher highs and higher lows. We're getting a good displacement out of it. So you could take something like this. Like this would be a trade that you could take. I'm not taking anything because it's like we're literally just showing you guys like kind of reaction stuff. But yeah, like we see that would have hit because we have this condition. We respected the condition. We got the displacement out of the condition, and we're making the higher highs and the higher lows. So like these are just things that you guys should practice. I'm gonna give you guys something to look at on the chart. But yeah, these are just things that you guys should practice um, by yourselves to be able to find your bias, and then find your conditions to where your draw on liquidity is. If you have a safe draw on liquidity, if it's strong, and it's just a really good target in general, your trade, like, bro, you should not be losing trades. Like, it's literally that simple. Let me know in the comments or in the Discord actually if you guys have any questions. Oh yeah, in the Discord, it's going to be in the description. And for now, the premium is going to be completely free. I'm not going to charge anybody for this premium because I'm like still building this. And I like to be honest, I don't have like the what's it called, the platform, and like the like I don't nobody really knows me right now, so I can't really charge. I'm not going to sit here and charge for a Discord where nobody really knows me. So premium is going to be free. If you guys join, you're instantly going to get the premium roles, and you're going to have signals. You're going to have um, daily bias. You're gonna have weekly recaps and then back testing videos for free. And then obviously y'all's questions will be answered in the Discord too. And also, if you guys see somebody in the Discord that were to ask a question, if I don't respond because like if I don't see it and someone says something and you know the answer, go ahead and help them out, guys, because like we're always trying to do the same thing, and like we should be all helping each other out. So yeah. Besides that, I really have nothing to say. Thank you guys, and I'll see you in